Your market news now. Asian stocks edged lower as the prospect of U.S. central bank having to stay on its hawkish path weighed on sentiment, with investors looking to the minutes of the latest Federal Reserve meeting for further monetary policy clues. And the currency market, the dollar hovered just shy of recent peaks as a three-week rally faded, with traders looking to European and U.S. manufacturing data later today and Friday's core personal consumption expenditure price index to help guide the Fed's next steps. In company news, last year a decrease in global iron ore prices and disruptions to Transnet's rail and port services were the major contributor to the earnings and profit drop experienced by Anglo-American subsidiary Kumba Iron Ore. I'll be speaking to the Kumba Iron Ore CEO Mpumi Zikalala in an hour's time. However, to talk to us about the latest when it comes to the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. With this backdrop that I've just described, where we are looking to the Fed minutes and we're also trying to get any clues in terms of whether the Fed is going to stay on its hawkish path, how are you looking at market sentiment right now? What's your screen saying?
It tells us that volatility continues to be the order of the day. As we've seen yesterday, it was not too bad because the U.S. market was closed, but knowing that they are opening today, I think this whole thing about the interest rates volatility is back as more of a trade more than anything. And also the minutes that we got, from the Australian Central Bank, all in all, the guys are saying, listen, we still need more interest rate hikes to make sure that we fight this inflation. And I think markets should get that to know that, listen, we are going to continue.
Right. Unfortunately, we did lose that picture with Makwe Masilela, but we're going to see if we can get that picture again. But just adding to some of the issues that he's just brought about, yesterday we were talking about the increase that we were seeing in CPI figures, as well as that surprising jobs report number, indicating to markets that perhaps the market might just be ready for a 50 basis point hike, given the fact that the Fed still needs to get to its interest rate target of 2%. But we do have Makwe back with us. Makwe, just picking up on that idea of a 50 basis point interest rate hike, given the surprising jobs report and that US CPI figure.
I think we might not get there because, remember, the guys don't have to be that aggressive as they've realized the potential of tipping economies into a recession. But what is certain, Nastasia, is that they will continue to increase, whether by 25 basis points, stuff like that, but interest rates will still stay high or be at elevated levels for longer than we thought. And anyway, the Fed chair did say it, that we should be getting used to that mantra, that higher rates will be there with us for much longer. And even the minutes from the Australian Central Bank indicate that they still have to increase more so that they continue to fight inflation.
Right. So in an environment like this that you've also just described, what are you doing in terms of allocations? What are you liking? What are you avoiding?
We look into bonds because as interest rates go up, it means yields go up as well. We've seen now that today even the yields are up because of the bets that interest rates will continue to go up. And also your food retailers, because should it happen that we get into trouble, we still have to continue to eat. And I think so far we've realized that if the government has to step in and try to stimulate the economy, one of the things that they do, they make sure that they cater for the lower LSM. And we know that those are the people who spend more than 50% of their money on food.
Let's talk about Kumba Iron Ore's results. I mean, the Transnet issues are going to be completely prevalent right now, given the fact that they have lowered their guidance over the next 3 years. What did you make of the figures?
I think Transnet, they have to get their act together because that goes in the fiscals. We know these are the guys who have been contributing significantly when it comes to tax revenues. And unfortunately, the guys also impacted by the drop when it comes to the global iron ore prices. I think they dropped by almost 27%. And Transnet and also extreme weather, which we cannot blame on Transnet. As a result, it led to production to drop by almost 8%. And their profits, as headline earnings per share, going down by 46%. And with dividends having to drop by almost 56%.
Tomorrow we've got the finance minister delivering his budget speech at 2 p.m. Lots of things to listen out for. But for you, what is going to be top of mind?
Top of mind is to hear whether they're not going to tell us that they're still going to be talking or planning to talk to people to tackle load shedding. We expect to get concrete steps, as the president stated in the SONA, that we should be getting more details coming out of the finance minister. And also we know that tomorrow as well, we've got the public sector unions giving a notice for indefinite strike because of wages. And we know one of the biggest things for the government is to make sure that they cap or they don't have to get the public sector wage bill to get out of control. What is it that they're going to be doing?
Markwe, let's leave it there. Thank you so much for your time. That is Markwe Masilela from Markwe Fund Managers. In other company news, we also had Adcock Ingram release their interests, or rather their numbers are increasing their dividend after seeing an increase in profits. But moving on, the world's biggest producer of fuel products and chemicals, Sasol, reported a 9% jump in half-year profit as higher oil prices offset the impact of weaker global economic growth, higher costs, power cuts, and poor rail logistics. The company declared an interim dividend of 7 Rand per share. I spoke to CEO Fleetwood Grabler for more.
I think our results is really mixed. If I look at the headwinds we had from our own operations within our control, as well as some of the macro headwinds in our operations in Europe, where energy prices really shot through the roof. We had to reduce output. We had to mitigate losses in terms of that high cost. So that impacted us really significantly. Our operations in the US has also been impacted by high feedstock costs and outages that was planned and outplanned. And I think in South Africa, one of the things that I look back at is that we had one of our biggest shutdowns in Secunda operations that is occurring historically every 4 years, which was done successfully, but that also impacted our output. So that would have been an additional volume of around 100,000 tons that we would have had in a normal outage. But not only that, we had our own impact with respect to the quality of coal that impacted our operations. And then last but not least, there is in the South African environment, we had factors like load shedding that impacted our customers and suppliers and some of our operations. We also had some impacts with respect to our movement of products from our facilities to the coast because of challenges in the rail network and port systems. So I look back at really a very challenging 6 months. But as we look now forward to this part of the financial year, I must say I am much more focused on the things that we can control. And I believe what we see ahead of us is going to be a better 6 months compared to the last 6 months.
When you look at the improvement of it, I mean, I remember last year you mentioned the combination of short-term and longer-term strategies. How have those been implemented, and what does the picture look like right now?
Yeah, thank you so much. We have last year indicated that we are experiencing impacts via the quality of our coal that we have available for our operations. But we also indicated that our key focus was our safety remediation plan in our mining business to up to the end of 22, which we have now really prioritized interventions successfully concluded, and we are in a much better safety space than the previous year. Now our focus is on increasing the productivity. Now, simply put, if we increase our productivity and we've got 5 collieries and we have the output of one of the mines with our best quality coal, and there's volume for that, we can then, when other mine is not producing the best quality, we can blend the quality up to a level that is much more acceptable to the Secunda operations, and that can unlock much more volume on that side. So our focus to improve coal quality comprise 3 things which we are seeing very, very good traction on. The first is to increase productivity so that we've got flexibility with our blending. The second is that we are looking at the way that we control our quality of coal at the mine coal face through interventions like cutting sequences, the focus on, the operator not cutting into the roof or the floor of the mine, and that we can reduce the number of sinks that is therefore produced as part of the coal to our facilities. And then the third thing is we are looking at also process destoning options that we know has been successfully implemented in other mining systems in South Africa that we may be able to benefit from, and thus through that implementation of destoning, we can then increase the output of our mines ourselves. And the last lever that we are pursuing is to see if we cannot buy in better quality coal, so that if you blend it with our own quality of coal, that the net result is the acceptable level of quality you need in our operations.
I'm curious, what's your assessment and expectations when it comes to the future security of natural gas supply?
So we are working hard. We've been bringing in gas from Mozambique from 2004 when we invested in the exploration and drilling and a pipeline with partners that bring gas into South Africa. And so we have been focusing very much to see how we can increase the life of that gas field. We have done infill wells that we've drilled in the last year in our PPA gas field with good success. And we are doubling down in that area to see whether we cannot find more gas. So far, we have seen promising results in terms of the PSA project, that is a gas supply to the Mozambican government for generating electricity in the country. So our options basically is focusing on our own gas field, explore more in the vicinity or around those boundaries. And we are in parallel also looking at the option to bring in liquefied natural gas, and there are two possible pathways to bring it into South Africa. The one is via Maputo to link up with the existing pipeline to bring it in country, and the other one is looking to bring it in via Richards Bay, because there's also a pipeline currently going down from our operations down to KZN and into the industry there. So there's a possibility to bring some of that gas back also through that pipeline. So I think, the aggregation effect between Sasol, CEF and other players is the big unlock here. So if we can bring in more gas, affordable gas for South Africa, because that's the only real backfall option. If we explore gas and we don't find gas, the only backstop is LNG that must be brought in through those routes.
What's the short-term focus for you and the team, and how do those factors that you mentioned that you can't control impact that focus?
So I think, what is very important for a management team is to do what you do well and focus on those areas that you can control. And so from our side, we as a team are focusing on getting the right productivity and volumes out of not only mining, but also out of our Secunda operations. We're also looking at maximizing natural gas into our operations for production. But the basic things like keep a good focus and make sure that your cash fixed costs are under control, that you maximize all the areas where you can increase margin, contain working capital, and make sure you spend the right amount of capital. Those are the things that we believe we will continue to focus on to make an impact as a management team, notwithstanding all of these other factors like oil price, like excursion of energy costs and inflation that we can't directly control. But it is how we respond in an agile manner that we will be focusing on.
Well, that is it from me. We're going to take a quick break. When we come back, we'll have more news for you. And at 2 p.m., we'll have that interview with the Kumba Iron Ore CEO. Stay tuned.